Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir, and today's episode is going to be focusing on Snowflake. Snowflake is not necessarily a Palantir competitor. There are places where they compete in the broader data space. You can put them together as a competitor. They're obviously a SaaS company. They've been valued at a premium to Palantir for the better part of 2 years now. They had their earnings yesterday, and let's just say those earnings did not do well. I have a lot of thoughts on their earnings, a lot of thoughts for them as a company, and a lot of thoughts on the implications this has for Palantir. This is going to be a full episode on Snowflake. Thank you for being here. Let's get into it. Okay, so high-level thoughts on what's going on with Palantir and Snowflake. Yesterday, Snowflake did two things that really annoyed Wall Street. And before I tell you those two things, one thing I want to say is that this has been one of the most beloved stocks by Wall Street ever. Warren Buffett still has a small stake in it. He made about $800 million when they went public at about $250 a share in 2020. The street bought it up, price targets up the wazoo. At one point, it was worth almost $430, and it has fallen 20%. Now it is about $187. Wall Street has always felt Snowflake has the growth, Snowflake has the leadership, and Snowflake has the potential to become one of the core enterprise data platforms on the planet. As you can see right now, the stock 187, down about 19% for the day. They have not liked Palantir. Why did the street not like Palantir? A couple reasons. Number one, Palantir did a DPO versus IPO. When you do a direct public offering versus an initial public offering, you're essentially taking the shares of the company and putting them up for sale. So employees basically get to cash out at the expense of individual investors, retail, institutional that want to buy shares from employees, right? So it's a transfer of the shares. An IPO, you're actually making the shares. And in that process, the people that underwrite the IPO, the JP Morgans, the Goldman Sachs of the world, these are the people that also upgrade or downgrade a stock, they make a lot of money. Palantir didn't go that direction. Number two, Alex Karp is not necessarily the most likable guy on Wall Street because he kind of critiques the entire frame and mechanism and sort of psychology behind how analysts try to analyze a company. And he's very explicit about that. And he has never, not even until, the stock went to $6, he never wavered from that sort of philosophy, that kind of characteristic of himself, that persona that he had, because he always believed at the end of the day that you've got to be truthful. And if he truthfully does not think that analysts are analyzing his company correctly, it doesn't matter if the stock's in the gutter. He's going to say that, you know what? You guys got it wrong. And in order to be able to get Wall Street to like Palantir had to go through a lot of stuff. They had to become GAAP profitable for 5 quarters in a row. They had to fundamentally pivot the nature of the company from being just a sort of foundry, ontology, data organization company to an AI play, which means they had to roll out new products. Obviously, what's Wall Street investing in? AI. Palantir has always been AI, but when you call your flagship product, your newest product, AIP, you definitely are catering to Wall Street, but there also has to be technology underneath that to undergird the growth, the numbers to justify the AI hype, which Palantir has been able to do. So for the past year and a half, they put up the numbers, they put up the GAAP profitability, and they innovated by putting up the actual products that Wall Street was looking for in the context of AI. Wall Street has never liked Palantir. They've always liked Snowflake. So why yesterday did they do two things that really pissed off Wall Street to the point where they dropped the stock 18%? Well, the first thing, and I mean, this is one of those things where if you're going to do it as a public company, it's definitely going to piss off people. Let me tell you this, if Palantir did what Snowflake did that I'm about to show you, I think Palantir stock would probably be down 30-40% because no one would have expected it. Snowflake got rid of their CEO, or I should rather say Frank Slootman, the CEO of Snowflake, stepped down. He's now the chairman of the board. When you're investing in a public company, you are basically investing in the CEO. If you cannot trust the CEO, which is why CEOs make a lot of money if they get the job done, and they also take all of the blame if they can't get the job done, they are where the buck stops. That's why CEOs are compensated so heavily. Frank Slootman is leaving, and Sridhar Ramaswamy is now the CEO of Snowflake. He's going to be taking over Snowflake, the company. This immediately tanked the stock. And the reason it tanked the stock is because Wall Street had no idea what to do in terms of conceptualizing, who this new guy is. Now, who is this guy? He worked at Google. He was a senior ad executive. He took the company from $1.5 billion in ad sales to $100 billion. So obviously he has executive leadership, executive skills. I'm sure he's a fantastic executive. But one thing people forget about what Snowflake did back in 2023 is they bought a company called Neeva for $150 million. Now, what is Neeva? Neeva is a search engine that tried to compete with Google. And the whole idea was, what if we could give you AI-based responses versus 10 blue links? Obviously, ChatGPT came out and that kind of killed Neeva, right? So Neeva didn't end up working out. Snowflake bought Neva from Ramaswamy, and that was his company. He was the CEO of the company. It has become apparent to me that I believe, personally, there was no proprietary technology in Neva. There was nothing unique that was differentiating it from any of the other LLM players that are out there. There was nothing sort of special. Otherwise, if there was something really special, maybe the startup would have worked. And I don't know why they paid $150 million. It is what it is. But I personally don't believe that Neva had some phenomenal technology that just needed to be acquired by Snowflake, especially because we haven't seen Snowflake's enterprise AI kind of AIP competitor platform roll out that is, using Neva's technology. I think they bought Neva to get this guy. I think a couple of months ago, this was done, I think back in May of 2023, they had a realization that, wait a second, Slootman's not going to be here forever. He's run 3 companies before in the past. He's 65 years old. So God bless him. He obviously wants to step down and, he's tired of running companies. That makes all the sense in the world. But they needed a replacement, and they needed a replacement that the street would be happy with. Remember, Slootman joined the company back in 2019. And so if you need a replacement, what if you could get someone who's been in advertising, knows how to run a company, right? Someone like this guy right here. And I think that's the decision they made. And as a result of that, I feel like Wall Street felt like they got rug pulled, because at the point where you're getting a brand new CEO that you don't know how to make sense of, you don't know if this guy can take the company to $300, $400, $500 billion. I mean, yeah, he's done well in the past, but he's never been a CEO of a public company. It's a real, and this is why I'm saying, if Karp stepped down yesterday, I think Palantir would tank 40%. Now, some people may say, people would like if Karp steps down. I think the majority of people, including myself, would really heavily consider my Palantir position if Karp's not leading the ship. This is the difference between a founder as the CEO and investing in someone like Palantir, Alex Karp, who is the founder, versus someone who comes in to take over a company like Frank Slootman. It's just a totally different relationship. So that was the first thing that Snowflake did yesterday that really shocked Wall Street. And I'm going to talk a little bit more about why this in particular was not the best for the company in regards to how Wall Street thought of the CEO. Number 2, the second thing they did, they reduced their guidance to 22% year-over-year full year guidance for 2024. Now, why does that matter? Snowflake is one of those companies that has been compared to Palantir as yes, they're trading at a premium. Before going into the print yesterday, they were trading at about $76 billion, Palantir at $55 billion. So a $20 billion premium for a company doing about $500, $600 million more in revenue. It's hard to really justify those multiples. By the way, Snowflake is not GAAP profitable. They're sacrificing GAAP profitability for growth. Palantir is growing profitably. So nonetheless, right? Snowflake is not profitable. Snowflake, I believe, doesn't have any phenomenal enterprise AI sort of platforms or products that are going to transform an organization. They're a data lakehouse. And as a data lakehouse goes, you're going to get a lot of clients. They have over 8,000 clients. But are you going to be able to continue to grow and innovate in that space? When you reduce your guidance for the full year to 22%, when you were growing at above 30%, this quarter came in at 34%, but then you significantly reduce your guidance, Wall Street's going to start looking at you in an interesting way. And Palantir's only guiding for 20% growth. So let's look at this scenario. Snowflake's guiding for 22%. Palantir's guiding for 20%. If Palantir is actually sandbagging their guidance and they grow at 23, 24%, and let's say Snowflake's sandbagging as well and they grow to 23, 24, 25, they're basically going to be growing the same amount. So then I think you have to really ask yourself, if you're Wall Street, well, is there a moat to Snowflake? Because if they're growing the same amount, if they're relatively in the same space in regards of the companies they're going after, the data they're going after, the clients they're going after, then why are we giving one of these guys a multiple if they're not even growing as much as a company like Palantir? Now, people will say that they're sandbagging the guidance in the context for Snowflake because they want to set up an easy layup for the CEO to be able to over-deliver on under-promises, and so that'll make the street happy. If that's the case, again, that's Snowflake trying to appease Wall Street. But what they showed yesterday was that they're not going to be growing that much more than Palantir. And as a result of that, the street was not very happy. Here's another thing that was really important to look at. Snowflake stock-based compensation, 2023, $861 million. 2024, $1.1 billion. I think it's really, really important to understand this slide right here. You cannot go from 861 million to 1.1 billion and you're only doing about 2.6 billion in revenue. That means almost half of your revenue is stock-based comp. And look, I'll just, go on the record here. I do not think the employees at Snowflake, which are majority salespeople, right? This is a company that has a very thick sales force, are smarter than a lot of the people working at Palantir that have to go through 10,000 interviews just to get the final interview to get the job. I mean, those people, I think, deserve the stock-based compensation. By the way, Palantir only had 430 million, so about 20% of revenues, whereas Snowflake did almost half of revenues at 1.1 billion. So you got Palantir that's being lean, GAAP profitable, and hiring the smartest talent in the world that they're, in the words of Karp, bombarded with in terms of talent that wants to join the company. And they're somehow only managing to do $430 million in stock-based comp. Then you got Snowflake, which is growing faster, but not anymore as per their guidance. A CEO that was the beloved star of Wall Street that left for some guy that, quite frankly, Wall Street doesn't even know what to make sense of. Even Brad Altimeter, or Brad Gerson, the founder of Altimeter Capital, he has a heavy position in Snowflake, has since the IPO. He even tweeted today, yeah, the quarter was okay with the numbers, which I agree with, but the communication on the call was really bad, which I also agree with. The communication on the call was just horrible. Then you got a company like Snowflake that's really not GAAP profitable, spending all this money on stock-based compensation, and they don't have a product moat that's exceptional, where if you're a Palantir investor, I think you can pretty much do the conclusion from your due diligence that they have a product that is absolutely exceptional. What is the reason for them to get a higher valuation? And I think that's what we're seeing right now. Snowflake right here at a $62 billion market cap. Palantir after hours, $25.19. Fourth time we close above 25 in the past 2 weeks. $55 billion market cap. So now the delta between Snowflake and Palantir is about $7 billion, where a couple of days ago it was, $20 billion. And I think that delta might get closer. Now, Wall Street might buy up the dip. Sure, they're probably going to buy up the dip because, this is a stock that they love. But today it was down 18% and it didn't recover. And I think it's because Wall Street's like, well, you got to really show us, if you want us to buy up your stock, that you guys are not only going to continue to grow, but that this new guy who's taking over the reins of the company actually is able to take over the reins of the company. Here's the Snowflake CEO, former CEO, Frank Slootman, actually introducing the new CEO, and you guys can hear him for about a minute and hear what he has to say about leaving the company.
Yeah, it's certainly that. But it's also having a great opportunity to have cross paths with somebody like Sridhar that we're thrilled to bits that we're able to make this move and affect succession in this way. Been part of many successions in the past, and they're difficult and hard and challenging. So I'm super, super pleased to be where we are today.
All right, so Sridhar, I know you as someone, I know you from a close friend of ours, admittedly, but you came in at 1.5 billion in ad sales, and you took it to 100 bill. I think that's not so bad, but big shoes here, because when Frank retired from ServiceNow, it was a 67, and then it went to 759. What are your plans going forward to keep the momentum?
Frank and our founders have built Snowflake to be the trusted, efficient, cost-effective enterprise data platform. That's a pretty good base to build on top of. But what's really exciting about the current moment, Jim, is that we have so much ambition to do more, whether it is applications running on top of Snowflake, or of course, using the power of generative AI, which I've been focused on for the past year, to democratize access to enterprise data, to have even more people be able to get at the data quickly, to get value from it. So I think there's a huge opportunity in the world of data, applications, and AI that'll keep me busy for many years to come.
Well, let me ask you, what do you think about the...
So that is the new CEO of Snowflake. And, it is what it is. At the end of the day, what does this mean for Palantir shareholders? I think, and here's a tweet I want to show you guys. Then we're going to listen to Karp actually talk about Snowflake. Some people forget that he has gone on the record and said some thoughts about Snowflake, and I'll show you what he has to say in a second. But someone tweeted today, why are Palantir investors so uptight about Snowflake, right? Like, why are they so emotional about it and all this stuff? And I agree, I'm very emotional about this. I try to be objective. I think Snowflake's a phenomenal company, phenomenal product. I don't think it's as transformational as Palantir, but there is a reason we do get emotional about this. And the reason for that is very simple. So here's what someone tweeted. Palantir diluted us with SBC for years to get profitable on paper. Palantir is growing 50% slower than Snowflake. Palantir is 10 years old as a company. It's actually 20 years old as a company. But why are Palantir holders so emotional towards Snowflake? Now, my response is it's because the street hated Palantir and loved Snowflake. This is what I said in the beginning of the video. But all of us knew Snowflake was nothing special. Great company, but nothing that special. Great company, great product, but not special, especially not at its valuation delta compared to Palantir. Now, as the CEO steps down and rug pulls all the investors, that's not a shade at Frank Slootman, but it is what it is, right? When you step down, a lot of people that trusted in you now don't get to trust in you anymore because you're not running the company. They trusted that he was going to keep the company growing, and they lower their growth to almost the same as Palantir, and they're not profitable. That makes it a big retail win against the street now that they have to buy Palantir when they were buying Snow a year ago. 65% institutional float on Snowflake versus 40% for Palantir, because they realized leadership and product actually matter. The reason the street dumped Snowflake yesterday and they have started buying Palantir, we've seen that obviously Palantir is up 50%, institutional float is up, is because I think they're realizing, hey, maybe retail got it right. Maybe retail got it right. And Palantir has the best leadership, in my opinion, regardless of if the street doesn't like Alex Karp. Retail had his back when no one did, and he made the company GAAP profitable for 5 quarters in the face of the street being against them. That is why, we take it kind of personally. Like, we had Karp's back. We were buying his stock. We were championing his praises. We were saying this guy knows what he's doing when the stock was at all-time lows. And Snowflake had collapsed as well, but not at the point, not the level of Palantir collapsing. And it got to the point where it's just like the street doesn't get what we see in Palantir, but they kept buying just the growth of Snowflake. And at some, you can't just keep buying something to buy growth, right? You have to actually see, is there a product there? Ironically, if you don't have a real product, eventually growth slows down, which is what we're seeing with Snowflake. So I think the reason Palantir investors should, look at this moment and just kind of give themselves a little pat on the back is not because it's bad for Snowflake. It's good for Snowflake to do bad. Like, you don't want companies to do bad, but you are recognizing that Alex Karp is not stepping down. He's not leaving. When he's on an earnings call, he is speaking with energy and fire. He wants to attack the market. Like, you don't know if he's going to succeed, but in investing, you're willing to take a risk that they might. Whereas with Snowflake, the CEO's gone. He's the chair of the board. They hire some random new guy. We don't really understand what the product is going to do in terms of enterprise AI. I mean, guys, I was listening to the call and the new CEO was like, yeah, we want customers to be able to talk with their data and chat with their PDFs. And I was like, every startup in the world is trying to figure that stuff out. Like, that's not something that can be that special. There's no way you can be saying that that's like the most important thing you're working on. They didn't really have a holistic or conclusive understanding or explanation of what they're doing when it comes to AI-based approaches of data. And all the analysts I saw on CNBC today that were buying the dip on Snowflake, they were just like, well, in order for AI to be meaningful, you need to have data. It's like, yeah, no shit. Of course you need, but that's not the extent of your analysis to buy Snowflake at a $60 billion valuation. And if that is the extent of your analysis, all right. With Palantir, it's much more deeper than that. We know it's much more deeper than that. The CEO is able to explain how deeper it is. The CTO, Sham Sankar, is able to explain how much more deeper it is. And, I don't think Snowflake has been able to do that. And as a result, that is why I think the street is starting to finally recognize maybe product does matter. On top of that, Snowflake has a massive sales force. Palantir has 0 sales force. They're using 0, I'm saying hyperbolically. They have a very significantly smaller sales force, and they're using their product to sell, which is the most exciting part of this whole journey. Here's Alex Karp speaking about competition. A lot of people forget that he actually had a conversation with Kevin Warsh from Stanford University, and he spoke about competition and what it means to be competitive against companies like Snowflake. We're going to end off listening to what he had to say.
So I want to dig down into the companies. I want to dig down into the commercial business of yours, and if you're going to let me, a little bit on the military national security side. I think where we agree on the financial piece of it is there's going to be a bill to pay. There are no free lunches. And the more direct we can get the money to those that deserve it, the better off we'd be. But let's dig into the business. So on your commercial business, I'm going to take a shot at your competitors for a minute. Or your would-be competitors. Some of them have a lot of nice products. It strikes me as the non-technologist, their products are narrower than yours, maybe more easily digestible, certainly more easily saleable. How do you think about, the Snowflakes of the world, the Databricks of the world, and that product suite, as it were, compared to yours?
Well, that's both a shot at them and a could be a legitimate, critical, interesting question about Palantir. Our products are deeper than any other products on the market, have an institutional veracity that's differentiated, are doing things that are arguably more important. I don't think that's really subject to debate. I do think what is a legitimate question is if a product is future-oriented and requires a depth of understanding of the product, and or it doesn't inherently map to selling a wrench to a pre-existing technical org, will you capture the full value of those products? So I think you can ask the critical question of various companies. You mentioned too, there are many. Are the products actually thick enough to be valuable? You could ask the question of Palantir, is it thin enough to be fully monetized? And I think both questions are legitimate. What I would say is our view at Palantir is we're very differentiated in building these products before they exist. And on the thick part, we are without competition. So then there's a question of, are we able to supply parts of our product or various products, for example, products that we're building now, products that we have in Foundry, to an enterprise that may in fact prefer something that fits into their architecture that is thinner. That gets into a very legitimate question, which is, okay, forget now. It's like, is Palantir building the product of the future, but willing to supply into the current environment by providing products that are more digestible into an organization that maybe it wants to go their own way and wants to buy a certain product for a certain thing, but does not want to buy all of Foundry. By the way, and so the answer in the near term has been yes, but in the future, we are going to continue to focus very much on what you're calling kind of thick, future-oriented products because they're differentiated. But then as the parts of this product become less differentiated and more, for lack of a better word, commodity, like there's 8 companies that supply them, figuring out ways to decouple the product and sell these things in a modular way, partly because there's an assumption which is just not true that is very intuitive, that if you have a full stack product, that the sums of the product are less valuable than if they were taken apart, i.e. that each part of that product is inferior to a product that's just that product. But it's actually not true at all. It's actually the opposite. And part of what we will be doing over the next couple of years is both continuing to build things that are not understood, sell them to deal with the macro conditions that you have outlined, that I agree, but also democratizing parts of our product so that people who want a different version of the product can also buy it. We're not super ideological there, as long as our core mission is to continue to be entrepreneurial outsiders.
Now that right there is very important. I wanted to play that. Karp says a couple things right there. Number one, he wants to continue to remain entrepreneurial, innovative, and outsiders. What does that mean in the context of product? That means building shit before people know they need it, which is what they did with AIP. It's literally what they did with AIP. They had they needed the thing to get mainstream. That was ChatGPT. They had all the technology ready to go. ChatGPT comes out in November 2022. April, AIP launches. And then in June and September, you get 2 AIP conferences with companies using it, now growing 70% year over year in the United States. I think that is the difference between Palantir and a Snowflake. As he says, a thick product that is future-looking and transformational that can be modularized to sell in different ways. We see this with Palantir's pay-as-you-go. Now people can get certain parts of Foundry, certain terminals of Foundry, and be able to pay as they're using it, versus something that isn't thick at all, something like a Snowflake, that, yeah, you're going to get a lot of people that are going to buy it, but eventually it's going to become a commodity, and eventually that growth that you're experiencing, that the street's so happy about, that's not going to exist forever because it's a commodity. It's not an entire ontological, transformational infrastructure for your enterprise. I know that's a lot of buzzwords, but that is what it is at the end of the day when it comes to Palantir software. So there you go. Palantir, Snowflake. We'll see what happens with the stock. It's down 18%. I think regardless of what happens with the stock, what matters is how the company handled this transition, how the street is reacting to it, and ultimately how I think they will eventually go back or be introduced to Palantir, which is doing something a little bit different than a lot of these other enterprise software companies. Thank you everybody for watching. Hope you enjoyed. Please subscribe, dailypalantir.substack.com. That's my free email newsletter. I'll see you guys in the next one. Bye everyone.